It's almost the end of the first quarter of 2018, and over the last few weeks we've seen a significant level of economic developments which I will talk to you today in today's monthly economic update for March. The most interesting piece of economic data point that came out was the fourth quarter GDP number, and with it the full year GDP number for 2017. We saw a significant slowdown in the fourth quarter as well as in the overall number, with it going to 3.1% in 2017 from the 4.5% recorded in 2016. We also saw, with the fourth quarter number coming in, revisions done to the previous 3 quarters as well, and a significant revision. So if you look at, for example, the first quarter of 2017, previous provisional estimates had it at around 3.9%, and with the latest update it came to about 3%. So all that, I think, has brought down the initially projected GDP number of maybe close to 4%. The slowdown, I think, is as a result of what has gone on in the agricultural sector that contracted in 2017 as well. Services and industry both contracted. Construction did not see a growth rate similar to what was there in 2016, but overall I think it's a reflection of a slowdown in consumption affected by the increases in indirect taxes such as VAT, and also the depreciation we've seen as well. So moving forward, I think the key thing now will be the policy challenges to maybe stimulate growth or get economic activity growing, and that will be, I think, a challenge for the government as well as the central bank. But I think on the other side, we've seen inflation coming off as well. The national index has also been slowing down, which is reflective of improvements, I think, in food supply conditions, but also base effects as well. If you look at some of the other data points, I think we're seeing improved FDI numbers, which recorded about 1.73 billion in 2017 compared to 2016. Improvement in export numbers as well coming in. So some of these numbers may be cushioning some of the import growth that we've seen as well. We're also seeing the LKR quite determined by market forces, and I think that's a key thing that we should continue to realize. The fact that it will move according to some of the trends that are going on, some of the developments in the economy, some of the sentiment changes, and we've seen it depreciating in recent few days, appreciating. So quite a difference in the rupee movement compared to other times when there was a bit of economic stability and the rupee was held at a certain level. So that's something I think key. On the global front, I think when we started the year, it was a theme by most global forecasters of global economic upturn, trade doing much better, but in recent few days that has been dimmed with what's gone on with the US government putting forward tariffs on certain items and the retaliation impacts that has been felt. So that will be a development that we need to watch out for to see whether this will have an impact on trade growth. We also saw the US Federal Reserve increasing its policy rate by another 25 basis points. It was much expected. And also they held the view that another 2 might be held this year, but increase what it will be for the future as well. In terms of the impact to Sri Lanka, I think it was largely priced in. We've not really seen a decline in foreign holdings within the time period. It's actually increased in recent weeks, which is a positive sign for the economy moving forward. So that's a quick roundup of what went on in March, and we hope you will stay tuned for future monthly economic updates such as this on Economy.lk.